Hello traders, it's Samurai Trader here. Welcome to this session, Target 300 Master Trader Program. This is the first of a regular series of videos that I'll now be recording for the sake of both my members and the general public. And in these recordings I'll be recapping various trade or trading opportunities that we had on various markets. I'll be giving you a whole lot of tips and ideas, and it's also going to act as a newsletter for our members. Now, what I discuss in these recordings is suitable for the futures markets, Forex, or stocks. Now, very important traders is that please get your notebook and pen out, because I will, and actually I promise you, I'll be giving you some real practical ideas that you can begin to use immediately. Now, also very importantly is that I'm going to be sharing with you the good, the bad, and the ugly. I'm going to be showing you a very silly mistake I made, a real, what would I call it, a newbie's mistake that's very easy to make, that I made this morning when you're distracted or when you're doing multiple things when you're trading. So I'll show you what that is, and I'm going to share with you the mistakes that I made besides the good stuff, because I truly want you to learn. Now, as always, I do need to put up the risk disclaimer. There is a risk in trading. If you're new to my videos, please ensure that you read the risk disclaimer in its entirety. Now, also, if you haven't requested one of my free ebooks, I've got the truth about day trading, also a free training manual. Please click the link below and obtain that. And even more importantly, make sure you subscribe to my YouTube channel to be kept up to date with my videos. And also, of course, join the Day Traders Fast Track program. So as we get underway, you may be thinking, target 300 or $300, what does that exactly mean? Time and time again, virtually, I wish I got $1 for every time I was asked this. What's a realistic profit target to be targeting as a trader? And I always talk to traders about achieving $200 a day as a day trader is a realistic target. Now, to achieve that, you need to be going for an average of $300 a day. Why? Because you're going to have down days. That is a reality of trading. Now, also, does it mean you stop at 300? Not necessarily. If you've got a strong trend day, whether it be an uptrend or a downtrend, you want to keep going with those, but maybe stop after your first loss. And we're going to be talking a lot about various strategies like those as we carry on with these regular videos. Now, if you haven't seen this table before, let me just quickly run through this. Now, irrespective of what market you're trading, stocks, futures, or Forex, let's just assume here that you started off with a capital of $5,000 and you average 200 net at the end of a week. That is net per contract. That is $1,000 at the end of a week trading one contract. In 10 weeks you've doubled your money and you start trading 2 contracts, and you increase that over a period of time. Now, what we can see down here is that let's just take a 10-week period. Actually, we'll jump up to 16 weeks. Okay, at 16 weeks at $200 a day per contract, you're earning $10,000 per week. Now, I believe that a poor man or woman is not a man or woman without a cent, but it's a man or woman without a dream. You've got to have a compelling future. You've got to have a target. Now, your target may be 100 a day. It may be 300 a day net per contract. Whatever it is, you need to have a target. So I really want you to start to set and to really jot down what is your daily target. Now, also, I've had a member email me recently about this statement. I said it without putting it up. He said, can I repeat it? Well, it's he who sweats more in training bleeds less in war. And of course, the fitter you are, the less likely you are to be injured. And of course, when it comes to trading, it really comes down to mastering your setup, spending the time back testing. Traders, take your time. Do not go live until you've mastered your setups in simulation. Just absolutely correct. I know this, some of this is going to be basic stuff, but as I go through a series, the way I look at this trade is if you can pick up just one idea from every session that I run, it's all been worthwhile. Just that one idea may change your trading career. And that's where really you'll hear me talk about that the sign of an intelligent person is how open they are to new ideas. Now, I'm not saying don't verify the idea. By all means, verify the idea through back testing, but at least be open-minded. That's what trading is really all about. Now, in my program, the Day Traders Fast Track program, I now teach over 15 strategies. What I don't have here for our Renko traders is we've now got what we call the rule of one, which works brilliantly with the Renko charts, which we're going to be looking at in a moment. But become a specialist. If you're a new trader, or if trading has not been kind to you up till now, focus on 1 to 3 strategies, trend following strategies, until you're consistently profitable. Now, another question I've received is about the wolf wave. Now, many of you have heard me talk about the wolf wave, and actually in the book Street Smarts, Linda Raschke talks about this, the wolf wave strategy, and what she states. Let me quote her out of a book. This particular methodology is perhaps the most unique, effective trading technique I've ever come across. It was developed and shared by a good friend, Bill Wolf. For the past 10 years has made a living trading the S&P. So this is going to be our first tip of the day. Now, the wolf wave, you can Google it, and there's a ton of material on the internet about the wolf wave, but it does take a period of time to get used to. Now, for a wolf wave in a downtrending market, you need to have these 3 touch points. In an uptrending market, the same thing. Okay, so once again, I'm not going to really go into it in a great deal in this particular session, but it's a fantastic strategy, and what it really is, it's a rising or a falling wedge. But what makes it unique, traders, is that with the wolf wave, it gives you a projection of where the market is likely to go from the various touch points. And it's just a brilliant strategy. And what you'll find here is that you've got a projection from here going through up to here, and I'll show you a case from today on gold. Now, it's not difficult, it's just a little tricky, but because it's a rising or a falling wedge, it's a great strategy or a great pattern to be drawing in as you trade. Okay, because a rising wedge or a falling wedge, basically, if I can put it this way, what we've got here is the market is coiling. It's like a spring. We're getting ready for a breakout, and so the tide of a market gets here, we know that it's going to break one direction or another. So when you see this sort of pattern, irrespective of whether you trade the wolf wave using that methodology or not, it's really a great pattern to learn. And we'll discuss this in further sessions. We'll talk more about fractal trading, but when you draw your trend lines using fractals, it also makes drawing these patterns certainly a lot easier. So let's now go and jump onto the charts, and I want to show you a few things. First of all, I want to show you a major mistake that I made during the Globex session trading today. So this is after the market closed. So the majority of my members are USA based, and a question that I have asked regularly: what are some great markets to trade when I get home, before I go live, or before I leave my job, perhaps I should say, actually? Well, you've got lots of action on gold that we're looking at here. Mind, it can be tricky. We won't get too much into talking about risk on gold today, but generally you want to have a larger trading account. You get some great moves on oil, the NQ, the ES, the YM. Now, if you're trading 50 lots, forget it. Okay, it is thinly traded, but if you're trading 1 to 5 contracts, you're going to have no problems with your fills. You might get a little slippage in a fast moving market, but there's still great markets to trade. but let me show you an error, and I want you to jot this down. It's a really basic error that I made that cost me a great trade. Now first of all, for my members, I had a great setup. I had a 2D setup. Now for non-members, a 2D is just a super reliable setup that sets up. You probably get about one every couple of hours, but they're just a very high probability. But I actually missed it. I was actually preparing the slides for this presentation, and so I on the trading dome I actually saw this setup on gold, and here it was here. So what I had at this stage, and let me just show you this, I had gold had opened. It had been opened I think it was 22 minutes for Globex session. So the regular session closed. It closes for around an hour, reopened 12 minutes, or actually sorry, about 22 minutes later to be exact. We had a great V trade set up at T3. We also had something else that made this a brilliant trade. What is it? Look over at our anchor chart. What can we see happening here? We can see a bounce off for 200. So I had great angulation. I had a great move down. I had a 200 bounce. It was a beautiful trade. So I went to execute the trade, but I thought I was looking at CL. In actual fact, this is the gold chart for GC. So on the trading dome I actually executed the trade on CL, and I went long. Now I straight away I realized I'd made a mistake. And so what do you do when you make a mistake? Well, there's a couple of things we can do. Of course, is do nothing and hope and pray, or we can exit the trade. One of my trading rules is that should I ever make a mistake is to exit the trade. Develop the discipline. So I exited. I got out of a trade at break even, so it cost me basically commission of around $20 on 5 contracts. Now yes, it went up, and I actually could have picked up 4 to 5 ticks, because it hovered around this area for a while, then it ticked up before it rolled over, and I actually shorted this one as a rule of 1, and we'll talk about that in a moment. But here I decided to get out. Now why was it a silly mistake? One, I wasn't focused. I was doing multiple things, and once again, there's an old saying, traders, the teacher is the one that really has to learn. And it was a silly mistake preparing PowerPoints, and look, it's just so easy to do. So if I make this mistake, I guarantee the majority of traders are going to do it probably twice as much as me. So just be aware of that. So double check your charts, check your domes, check the amount of contracts you've got on there. Check. Absolutely critical, traders, because sometimes these mistakes can be very costly. In actual fact, it cost me 6 ticks, which is about $280 thereabouts after commission. So it was an expensive mistake because I got out even though I could have moved. Because if we go back to the gold trade, we can see that was a beautiful move, and I could have trailed all the way up using an ATR all the way up to the 89 and the 200. So major stuff up. Now before we go back and we have a look at the other CL trade, what I want to point out here is this potential wolf wave. Now this is not a perfect wolf wave, traders, and the reason it's not perfect, of course, is we don't have a perfect rising wedge. This is almost more of a channel. As you can see here, we went up there, we had the energy, what I call the energy was coiling, it was building. I think the comment here, I think of a spring point, and finally and by the way, traders, you can see the T2s we had some great there were T1s, we had T2s, had some beautiful trades in this uptrend. Now just remember, with any strong trend, if you're drawing trend lines for a channel, you're ideally looking for at least 3 touch points. With the wolf wave, you're looking for also, you had one just back down a bit further back here, 1 2 3 4, you had 5 touch points. Now wolf waves, by the way, work on all markets and time frames, whether you trade a tick, a range, a Renko, whether you're trading a time-based charts. So I like to wait for the clear break. Okay, now in actual fact you can see here that we had a break of a channel. We had then an 89B come up here and we had a beautiful T10. All right, then the market fell away. Now the point, the projection point that you draw, and this is not a perfect one, it's from there to there, and you project it down, and once again we'll cover the wolf wave in more detail. And we can see here the market really had a big fall. All right, now here you could have trailed using an ATR, you could have trailed using our blue trigger line, etc. Now here, what's happening here? Now we can actually see here, traders, we had a lot of support. We look back over at the anchor chart, and what's happening here? It's right at the 200 again. So we can see the amount of support or resistance that a 200 EMA can do. But then of course it fell away, and we have a saying in our business: follow the gold, follow the gold. And of course then there was some beautiful with trend trades. Let's now go back to the Renko here, back to the CL chart. Now up here then I then had a nice short here for what we call a rule of one, and here I went for 7 ticks, so that was 350 gross on that trade. Now here, this was the low of the Globex session. Now the low at the time was 61.96. Now what you'll find with nearly every market, of course, because the market reopens, you'll go and test the lows or the highs time and time again. But because I was recording, I decided to what we call front run. That is, I put my exit for this trade at 61.97, which is 7 ticks, which is 350 gross on 5 contracts on CL. So I then got out, and we can see it easily punched through, and this is very, very common for anyone that's new in trading CL. You'll see it time and time again. When we go down to a low, it'll quite often, most of the time, punch through by at least 2 ticks. There's some profit taking out some stops, then it rallies back up again, and there were some beautiful trades thereafter. Then we had some more 2Ds. Now just remember, when you're trading divergence, traders, that it is higher risk, and what you've got to watch is that when you're trading divergence is that you'll quite often miss a good with trend trade. And what you've got to watch with trading particularly the Renko or the range charts, these moves, they can move very, very quickly. Okay, now this is once again as a reminder CL that we're looking at, so this is a CL chart. Now another very, very important point I want to bring up, traders, is to be remembering where's my pivot. Now as we know, we've got a very high probability that we're going to target the pivot, particularly if you're bouncing from the floor pivot down to the S1 or up to the R1, then up to the R2. So if you're at the floor pivot, the most accurate target is the R1 or the S1, the closest pivot. Very, very high percentage trade. So when you start to see the market turn, and particularly when you see that you're fairly close and we've got a market turn, we've got a nice T20 here, then we know there's a very high probability that we're going to hit the pivot. Now another very important thing, and this is particularly this is for members of the Day Traders Fast Track program, make sure you get in the habit of marking up every T20. Why is that? Now a T20 coincides with a 50 CCI zero line crossover, and of course what we know is that when we have a T20, very high probability that we're going to have a new trend. New trend, when the first trade you take after a new trend, is very good chance you're going to have a higher probability or a higher profitability with that trade. So mark them up, develop the habit of knowing when your T20s have set. Now remember, your T20s are even better after you have 3, 4, 5, or 6 waves in a trend. Why is that? Well, we know after we have a number of really good waves, we've got basically a greater probability of a good market turn. Now remember, traders, we're like surfers. We're waiting for the wave. We're just sitting there waiting for the wave, and this is what we can see here. Right, so the market, then we have our T20, we come up, we come down. Now remember, follow the gold. Now traders, very, very important, until you are consistently profitable, it is critical you follow the gold. It's absolutely critical. Now some traders will get bored, and you hear me talk a lot about this in the members videos. Well, that's where if you start drawing in your channels and your trend lines, etc., to keep yourself busy. For an example, here we can see here we could have drawn the here, we had a nice little divergence here. Now, and this is for everyone, just remember, when you have a divergence trade, the greater the angulation, the further away from your major EMAs you are, the better. Up here we ended up having a 2D. It was also a pivot bounce. As you can see here, we've fluffed around here for a little bit, and we're slowly rolling over. Now just remember that it is the Globex market, so it is a slower market now. It is what time is it now? It's nearly 1:30 p.m. Sydney time, so we've got London opens up in around 5-6 hours. So traders, I think we'll finish off there. Now the other thing I just wanted to mention was that we saw a very, very fast moving market, and something very, very important here. When the Globex market opened up today, the ES took off like a rocket, particularly for our Renko traders, and also on the NQ, because we've got the rumors of this trade war. President Trump is talking about increasing or a tariff on steel, so we saw a massive move. Traders, don't be tempted to jump in unless you're a master trader, you know how to trade fast markets, or you're comfortable. Just sit back and wait. Now after around half an hour to 45 minutes, it slowed down. Let me just actually pull up the NQ chart here. Okay, I've just pulled up the NQ, so it's calm right down there. And voluntarily, after it opened up, once it settled down, after about 30 minutes, there was some brilliant trading opportunities where you could get in, where it was slow enough that you actually, like for an example here, this is 15 minutes between here and here. You had 15 minutes. You had some great opportunity. You had rule of ones, you had 34 Bs, 89 Bs, you had great slingshots. So for your trend traders, there's some great opportunities, but many traders, I can promise you, that tried to trade the first 5 to 10 minutes probably hit their stop loss limits in that time period. So remember, in fast moving markets, just sit back and be patient. So traders, I trust you've picked up a few ideas. Please look forward to my next recording for the general public and members, and I'm calling these Target 300, by the way. Target 300 recordings. It's all about how do we get to a minimum of $300 a day as traders, irrespective. And just look, I've got to show you this just on that point. What about our Forex traders? Well, here on the Forex, if we look at Forex traders, if we just look here at, this is looking at the Aussie dollar. This is a 3 range on the Aussie dollar, and over here we've got a 3 range on the Renko charts. There's been some great opportunities there. So once again, all of the same setups work. It really doesn't matter what market you're trading. Yes, I know that different markets have different personalities, and that's fine, and that's what backtesting and watching and adjusting your setups. Probably the biggest difference, and if you were to say to me, look, what are the critical factors? I trade stocks. For the day trader fast track strategies, what are you looking for? As long as I've got a market that has a range, where you get a trading range and it's got some volume, I've got a market that'll work. Same with the Forex market, same with the futures market. No matter what you're looking at, whether it be the metals, whether it be the currencies, it really doesn't matter. As long as we've got ranges, we can make money, and that's really what's about traders. So traders, that's enough. We're 25 minutes into this recording. We'll email you automatically the next video in this series. Thank you, traders.